Good morning. Today is Sunday, February 2nd, 2025. And this is the weekly Bitcoin price forecast, looking at where Bitcoin went in the last week and where it could potentially go in the future. So this is the monthly chart for Bitcoin. So as we see, we have had, again, your your bull flag that happened here really for the majority of 2024, all the way into October. Had the huge run up into December of last year, reaching a high of like 108 for the year. It actually surpassed that high and went to 109 in January. So January was an overall up month, but as of the second day of February, which February has been all weekend so far, we've seen a drop from like 102 to 99. So 3,000. That's not much, honestly, and it's going to hit a couple key levels here. I don't really suspect that it'll go too much lower. We've already proven at this point it's almost impossible to get below 92. And we don't want to say impossibilities on really anything, but anything is possible, but it's improbable that we get too much below 92,000. Worst case, maybe we come here and clean some of this imbalance up. We're not going to clean all of it up. I don't think so. This imbalance between here is 72,000 and 92,000, as we've been talking about. That's going to be pretty hard to clean all that up because there is a lot of demand that actually is keeping it here, and there's a reason that there's a floor there. So I think that's why we're gonna we won't see too much more price depreciation from what I can tell. Okay, this is the weekly chart. So again, you had to run up. Major run up here, bouncing off of the 50 week moving average, and then ran all the way up, hit this ceiling again. I was saying it all the way over here. I said once we get past out of this area, this range, this bull flag, the run up is going to go to about 100K, and then this is the area it's probably going to fall to, because again, 100,000 is a psychological number. It is a super key level. It is strong only because it's easy for people to remember. It's like, oh, regardless of whether Bitcoin's at like 90,000 or 92 or 95 or 105 or 108, people say, oh yeah, Bitcoin's at 100,000. Like, they're not dialing in that precisely. It's like, well, how much is Bitcoin right now? Oh, it's at 100. It's 100,000. So 100,000 is a very key level and something that people need to, pay attention to. And one that I don't think they will have to pay attention to for too much more, because it will start hitting that 125s and then like the 150s and whatnot. So I think, let's say it goes down to 92. I think your next move ends up being a move up to that 125 range. And then in pretty short order, that 150 range, because like this is it's kind of a pseudo channel, I would say, that I would, I guess it's been going on since October. So for about 5 months, October, November, December, January. Yeah, 4 months. This has been a 4-month channel pretty much. I think we could see it extend up here. And then again, it kind of peaks out around like 125. So you may see some stall here and then 150, but the duration will be shorter. So this went from mid-November to mid-January. And again, the reason I think it'll be shorter is because look at all these things that happened at 100,000. So I'm not counting the blue line because that was something that I drew afterwards. $100,000 is a level of itself. This upward channel meets around $100,000. And then also there's this white line. There's this white line that I have to zoom out to explain. There's this white line that goes all the way from, I'm going back to 2016. And then we see the 2017 peak, the 2021 peak, the 2021 peak here. It was a dual peak year. And then finally, the logic would follow that, oh, okay, well, it peaked here, it peaked here, it peaked here, and now it hit this channel, and so this must be the peak. I don't think so. I don't think so at all. Like, I think that this is a level to be broken, that can be broken now, because you think about it, it went from nothing here to this is a major run-up. 2017 was a huge year. I think we're going to see a 2017-like year. 2020 was plagued by two things. 2020, we were coming off the heels of COVID and really just getting into the huge pandemic protocols and all the shuttering of business and stuff like that. But also politically, crypto did not have a great environment. So like right here, the reason that you had a peak and then a huge sell-off. I mean, how big was this sell-off? This sell-off was from tip to bottom, 53%. For us to get a 53% correction at this point, we would have to go all the way back down to, okay, so that's the tip right there. 53% puts us below, it puts us at 50,000. I mean, yeah, it puts us roughly at 50,000. That doesn't seem reasonable. To me, at least, that does not seem reasonable. just for nowhere and for no reason. So we have not reached the peak at all, y'all. That's my overall point in saying this. The reason that I understand that this is like ranging right now and that it's not doing that much is because, again, it hit 3 levels all at once. It hit this upward white channel. It hit the $100,000 mark, which coincide perfectly, and then it hit this green channel. So actually, let's zoom in there on the daily chart and see exactly how well, at what price point all of these meet. So you have the green channel that goes all the way up to here, and the white line goes all. So let's call it right here. So it meets at a price of $100,000. Like obviously the 100 is like a line right there. But even if you just counted these 2 channels, if you count these 2 channels, I'm not counting the gold line. If you count that still gets you at $98,000. So you can do some like kind of pre-charting and see like, all right, well, where are things going to bounce? And you see, it got here, it bounced, it went above 100, and it just kind of stayed here. The other thing that I note now is we see, I said for a long time, all right, well, it can't beat 92. It can't beat 92. It can't beat 92. Let's zoom in. We couldn't get below 92,000. 1, 2, 3, 4, 5, 6, 7 attempts to get close below 92,000 on the daily chart, and they couldn't do it. We see that price has never hit the 100 moving average, like at least not never, but not in the last several months. So we haven't hit the 100-day moving average for a long time. The 50-day moving average has served as a pretty good kind of buffer. So we see we're right here now. Over the weekend, obviously stuff is kind of falling off, and even on Friday, but I don't see us staying below here too long. And my point for saying this earlier is we see that 92 held pretty strong here, but now what I'm seeing is we've elevated, and now 100,000 is holding much stronger than this 92. Well, not much stronger, but it is starting to hold. So you have 1, 2, 3, 4, 5 attempts to get down there, and then finally it did get a little below. But guess what? You got the cavalry coming in terms of the 50-day moving average to help. Let's kind of say that. Let me remove these lines because they have been broken. But yeah, so the 50-day moving average, the next place that it could go is 92 again. So again, God forbid it taps it one more time, and now it would hit the 100-day moving average if it goes back down to 92. So if it goes back down to 92 and it hits a 100-day moving average and this very strong support area at this point from what we've seen, it's going to explode. It's going to go. It might range for a bit, but it's going to go up very quickly because the lower that you go on price, the more pent up demand is sitting around here. There may not be as much, up here in these rarefied areas, but the lower you go, the more demand there is, and that's why you have prices that hold here. So I think that's overall on the charts. Actually, this is a little bit longer than I talked about the charts for real, but that's cool. No, this is a a good way to kind of walk through it. And I like to explain why. If you understand why the price is doing what it's doing, then it doesn't become scary. If you can explain it and you can look at it and say like, all right, well, price is going down, but why is it going down? If you can come up with a logical solution as to why it is, or something on the chart that points to areas of protection, then there's not too much to worry about. So I guess that's all I'll talk about for the chart. I may come back to it. This is maybe a 15-minute video. Who knows? This is the news. Forex Factory, really nothing this week. So ISM, jobs opening, employment change. So this is an employment labor heavy week. So you got unemployment claims. And the big one here is non-farm employment change. This is the one on a monthly basis. They do it the first Friday of every month. They release the change in employment, which, as the name suggests, from non-farm related and agriculture related jobs. So you want this to be a higher number. So previously it was at 256, and that skews the data. So let's go ahead and do this. We beat last month, and we are forecasted for 154, so somewhere around here. So we'll see if we beat it. Hopefully we beat it again. And go on from there. But otherwise, no major news impacting anything. I don't even think going into next week. So I want to talk a little bit about stocks and kind of where we're at and what the future kind of holds for like AI, because I think that will have a material impact on the crypto market too. Because I think Wall Street, this is my personal opinion, Wall Street is very shaky right now. Wall Street is very shaky. So let's look at this. This is a tweet from June of 2023. To put the Magnificent Seven into perspective, 7 stocks in the S&P, so Apple, Microsoft, Google, Amazon, Nvidia, Tesla, and Meta, Facebook, have returned 53% year to date. So middle of the year, they've gone on a tear. So 50% up, just these couple stocks on average. If you kind of treat this as an index and move it as an average, they have increased on average 53%. Okay, but the other 493, this is the S&P 500 that we're looking at. 493, so the 500 minus the 7, have done nothing. and this was in June, and this pattern continued to persist. Nothing changed. So this blue line down here, this is the other 493 in the S&P. So they were either negative to flat the entire time, ever so slightly positive. The S&P overall was up 11% for the year, which is kind of what you anticipate. 8 to 10% is what we've seen historically out of the S&P. But that 11%, so take away these 7 stocks, and this S&P, and then this 11% goes to zero. The S&P returned nothing and again, this is only half a year, but like I'm telling you, this pattern continued to persist. And the reason that there was so much hype here is because there was all of this AI speculation, large language models and deep learning and all this other type of stuff. So, obviously, Meta's big into AI. Amazon is big into AI and robotics. Apple is a little late on the party to AI, but they're getting into it. Microsoft, huge on AI. Google, huge on AI. Tesla, huge on AI. And NVIDIA is like the AI godfather, right? They get all the chips from them. So these are major stocks in the stock market. And so if these are the ones holding up all the stock market, then that means they're important. That means you're kind of holding up 493 stocks on 7 stocks. That's they're important to the stock market right now. And I don't think that puts us in a very healthy situation. The reason that I say this is because we have to think about, again, that chart was from 2023 year to date. So as of 6 months into 2023, that was the stuff. So this is another page. Chart of the week. Magnificent 7 has seen 3 times better performance than the other 493 stocks in the S&P in 17 months. Let's look at this. So this is a more pronounced chart. So, okay, so you had the pandemic here, as we talked about. You had the first Federal Reserve, the rate hikes, they ended. I'm sorry, this is the first one. So this is the first rate hike in 2021. So we start hiking interest rates very, very quickly. And so, you had this downtrend because, again, hiking rates, it's not the best for the stock market. And, it moves people into a less risky environment, which generally is not Wall Street or not any of the risk appetite things. But then in late 2022, somewhere in November, something happened. ChatGPT was released by OpenAI. And this sparked an AI arms race, an AI revolution. And, everyone's in AI right now, blah, 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 blah. So we get to 2023 and, we get past the holidays and all that, this will sell off in the holidays. But come January, they come out the gates. People have new budgets. They have all this other type of stuff. And so the stock market begins to rally. And this is only the Magnificent 7. So the Magnificent 7 is, in my opinion, all predicated on AI hype. It's all predicated on AI hype. So you get all this growth came after ChatGPT was released. Here's where I'm going with this. We saw recently DeepSeek. With come out from China, and they have created a model. They've created this model that is similar to ChatGPT. It's very, they kind of do similar things. They're large language models. The thing is, with this, they were able to, and now again, the numbers are questionable, but what we've been able to say is AI for a long time had a very large monopoly on AI. I would say they were the major player pretty much, and there were other competitors. But when you think AI, you think ChatGPT, you think OpenAI. This DeepSeek throws a wrench into the thing because for the large part, most of AI was concentrated in America, in the Magnificent 7. So you have your Googles, and I named all these and said what they did with AI. There wasn't too much coming out of Europe. There wasn't anything coming out of Australia. Nothing out of South America. Nothing out of much of Asia. I mean, really much of Asia, really, until China dropped this bombshell. DeepSeek, and they were able to very quickly shift market share. Which is something that we haven't seen. Again, AI has only been out for about 2 years at this point. Late 2022 to early 2025. That's roughly about 2 years. 2023 and 2024. But at this point, it's interesting. We're in a very interesting time because I say all that to say, if all of this was AI hype, then suddenly I could see this falling. Because, all right, well, suddenly ChatGPT isn't the holy grail anymore, and other people can produce it arguably for less money and with better and with different models. NVIDIA will still do well because, again, everyone needs graphic processing units, but these other ones who are just strictly creating the software, I think that's going to be harder. I think that's going to be more difficult for them to kind of stay around. So with suddenly now, if we say that the S&P is no longer viable, and the NASDAQ and the Dow Jones, and again, this is just my opinion, if that is changed, then fundamentally they become less valuable. So, I mean, if this goes down, people are going to be finding new avenues to get gains pretty much. They're going to be finding new avenues. And I think the biggest one out there is going to be crypto. Economic. So I'm going to show you, this is the last thing I'll do because I'm already at 15 minutes, but I'm cooking right now, so it's fine. Sailor. I'm going to type in Sailor. I don't know where it is. Anyway, that's fine. I'll end it here. But anyway, I was going to show that, across all asset classes, I think Bitcoin and gold are the major two that I'm going to be paying attention to. I'm not as worried about the stock indexes because there's going to be much less volatility. Things like Bitcoin and gold, they're going to absolutely see a run. I mean, and we'll look into gold maybe next week, but if you're paying attention to gold, it just hit an all-time high. Central banks are buying gold at a rapid clip. I think they understand that we're going to get away from this fiat system pretty soon. I can feel it. They're stashing up on gold. They're stashing up on Bitcoin because these are hard assets. Bitcoin being the hardest asset, gold probably being a close second. So yeah, no, that's pretty much what we got. I'm interested to see how this plays out. We're in February now, and we're going to continue going forward. We'll continue going forward. I think we're going to have a good Q1 still. I think it's going to shock a lot of people. Retail and most investors are bored with Bitcoin right now. But there's a lot of money at high levels playing with Bitcoin. So, I mean, I'm still locked in. I'm still paying attention. And when that retail interest returns, Bitcoin's going to move in spectacular ways. I think this is going to be a great 4 to 6 months. I've had the same opinion for quite some time. But yeah, that's been pretty much it. So, again, this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com. Check out the Escape Velocity Bootcamp, our crypto course from Pulse on Crypto. And other than that, I will see you on the moon. Take care. Bye-bye.